Hi everyone, welcome back to my channel. So today our video was about categorization of micro, small and medium enterprises according to the Act 2016. So the government has given new turnover based classification MSMEs in Feb 2018. As per this new classification, the MSMEs are categorized in new business turnover. This is rough idea, but these values are very important. So last year in mains they asked this one as one question, guys. So the Micro, Small and Medium Enterprises Development Act 2016. So micro enterprise will define unit turnover. So this table is very important, so we will neglect this information. Okay, it was micro, small and medium enterprises. So micro enterprises value was, this is present value, 1 crore to 5 crore. Okay, and micro, small and enterprises value, small enterprises value 10 crore to 50 crore, and medium enterprises value 50 crore to 250 crore. Okay, this is very important once you read it. So in MSMEs, okay, micro, small and medium. In micro the range was 1 crore to 5 crore, and small was means 10 crore to 50 crore, and in medium was 50 crore to 250 crore. Okay, so this is the classification of MSMEs at present. And next, priority sector lending rates. So this is rough information. Farmers with land holding up to 1 acre are considered as a marginal farmers. Farmers with land holding of more than 1 acre and up to 2 hectares are considered as a small farmers. So this is also rough information, we don't waste our time. So we will go to the next important one, monitoring of priority sector lending rate. To ensure continuous flow of credit to priority sector, there will be more frequent monitoring of priority sector lending compliances of banks. This is based on the quarterly basis, guys. So this monitoring of priority sector lending targets was quarterly basis. And next we will go to the Reserve Bank of India revises priority sector lending norms for RRBs. So the given targets category of priority sectors: agriculture, small and marginal, micro enterprises, weaker sections, monitoring. So these are also very rough information. Next we will go to the priority sector lending certificates. What was the priority sector lending certificate? So these are a mechanism to enable banks to achieve the priority sector lending targets and sub targets by purchasing of these instruments in the event of shortfall. So this is called as a incentivizes the surplus banks, as it allows them to sell their excess achievement. So this is also rough information about this priority sector. And the next important was financial markets. Okay, financial markets, important points on money market, capital market and their instrument. This is very important. Financial market. Okay, let's get started. The first one was money market. So in this money market, it is a market for short-term debt securities such as commercial papers, repos, negotiable certificates of deposits and treasury bills with a maturity of 1 year or less than 1 year. So this is called money market. So what was the money market? It is a market for a short-term debt securities such as commercial papers, repos and negotiable certificates of deposit and treasury with a maturity of 1 year or less. So once again, what was the money market? It is a short-term securities. It is a market for short-term debt securities, negotiable certificates, commercial papers, repos and treasury bills. So these are the maturity of over 1 year or less than 1 year. And the next one was, this was money market and this was capital market. What was the Capital markets, it is the market the long term funds. So the money market was short term funds and capital market was the long term funds. It refers to all the facilities and institutional arrangements for borrowing, lending, medium markets. So in this we will see the differences between the money market and capital markets. So here money market was already we read it in first one, so that is short term, and capital market was long term, and maturity period of money market was less than 1 year and capital market was beyond 1 year, and it means more than 1 year. Okay, in money market deals over the counter and in capital market deals over at stock exchange, and number of players are limited in money market and number of players unlimited in capital market. So this money market was regulated by the RBI, it means Reserve Bank of India, and this capital market was regulated by the SEBI, Security Exchange Board of India. So okay, so next once again we will get the rough information about these markets. So money market, this is for short term, okay, and debt securities such as commercial papers, repos, negotiable certificates of deposit and treasury bills with a maturity of 1 year or less. Okay, and capital market was long term, it means institutional arrangements of borrowing and lending, medium long term. The difference was it was short term and capital market was long term. So in this there is unlimited players, okay, and this is limited players. So this is by under the RBI and this is by Security Exchange Board of India, and the time period was 1 year or less than 1 year, beyond 1 year. Okay, and the next difference was deals over the control in money market and deals at stock exchange in capital market. So this is the major differences in money market and capital market. Next we will go to the major money market instruments. So these are certificate of deposits, commercial papers, interbank participating certificates, interbank term money, treasury bills, bill rediscounting, call and the notice money. So these are the major money market instruments. So these are certificate deposits, commercial papers, interbank participation certificates, and interbank term money, treasury bills, bill of rediscounting, call and the notice money. So these are also very important. So they ask in bits. Major money market instruments are certificate of deposits, okay, CD, and commercial papers, interbank participation certificates, interbank money, treasury bills, bill rediscounting, call and the notice money. Okay, so these are the very important. Once again we read it. What are the major money market instruments? Certificate of deposits, commercial papers, interbank participation certificates, interbank term money, treasury bills, bill rediscounting, call and the notice money. And next important one was call and the notice money. What was the difference between the call money and the notice money? So here in this money market, call money, this was lent or borrowed for 1 day, this is called call money, and notice money for 2 to 14 days, and term money for 15 days to 1 year. So here there are 3 types of monies in money market. So call money, notice money. So call money, notice money, term money. So this is for 1 day. Call money time period was 1 day, and notice money time period was 2 to 14 days, and term money was 15 days to 1 year. So this is the time period for these money markets. Call money for 1 day and notice money for 2 to 14 days and term money for 15 days to 1 year. And yield, what was the yield to maturity? Expected rate of return on the existing security purchased for the market is called yield to maturity. And the coupon rate was specified interest rate on the fixed maturity security fixed at the time of issue. Okay, so these are the important call money, notice money, term money, So these values are very very important. Once again, call money for 1 day, notice money for 2 to 14 days, and term money for 15 to 1 year. Okay, next we will go to the instruments of government and borrowings. So to meet the temporary receipt and expenditure mismatch of government obtained over the draft from the RBI under ways and means of advances. So it issue the management bills, treasury bills of 91 days, 180 days and 364 days. It means 91 into 2 and into 4. So these are the days for the instrument of government borrowing. It means ways and means of advances times. So that was either 91 days or 182 days and 364 days of maturity. Next we will go to the treasury bills. These are the instruments of short-term borrowing of central government issued at 1917. Treasury bills can be purchased anyone except state government. Minimum amount facility was 25,000 and the maturity of treasury bills was same in instrument government borrowings. And next one was cash management bills. So this was introduced in 2011. Short-term security to showed by the government India to raise temporary money for cash management. The tenure was less than 91. So this is cash management. The tenure is less than 91. And in treasury bills, 91 days, 182 days, 364 days. Same as instrument of government. 91 days, 182 days, 364 days. Okay. And next one was data securities. So this time period was up to 40 years. So these are the important of these markets. So the money major markets are certificate of deposits, commercial papers, interbank participation certificates, okay, and treasury bills, bill of discount, call and the notice money. In call and notice money there are three types of money. Call money was up to 1 day of borrowing and notice money was 2 to 14 days and term money was 15 to 1 year. Okay, so the next one was instrument of government borrowings, 91 days, 91 days, 182 days, 364 days. Same as treasury bills, 91 days, 182 days, 364 days. And in cash management bills, only less than 91 days for this cash management bills. So this is for raise temporary money for cash management needs. And data securities time period up to 40 years. Next important was what was the ways and means advances. This was introduced as per the agreement by Reserve Bank of India and government. So this is section. And next one was, so this is also in a rough information, certificate of deposit. This scheme was introduced by the 1989. Bulk of deposits from the market which can attract at competitive rates. So here maturity period was minimum 7 days and maximum 12 months. So this is also rough information. Next we will go to the next important one in banking awareness. So these are all about Deposit Insurance and Credit Guarantee Corporation of India. So what was the insurance by Deposit Insurance Credit Guarantee Corporation of India? All commercial banks including branches of foreign banks functioning in India, local area banks and also regional rural banks are insured by this Deposit Insurance and Credit Guarantee Corporation of India. So in this, all commercial banks including branches of foreign and functioning in India and also local area banks and regional rural banks. So these are insured by the DICGC. So what does the DICGC insures? It deposits foreign governments, deposits central and state governments, interbank deposits. So whatever they given any amount due to any deposit and deposits of state land developments. So these are the DICGC's information. Okay. So its maturity period was up to maximum 1 lakh and the headquarter of DICGC was Mumbai And the next we will go to the non-performing assets and Surface Act. It means once the borrower have failed to make interest or principal amount in 90 days. So the loan is considered as a non-performing asset. So here what was a non-performing asset means, if a person once take a borrower has failed to make interest or principal payments for 90 days, within 90 days they will not borrower and also fail to make the interest or principal amount in within 90 days, so that when that persons are called as, it means that loan was called as a non-performing asset. And next, which qualification loan has to non-performing assets? In non-performing assets we'll see in 2 crop seasons in case of short situation crops and 1 crop season. So this is overall, and the main important point was within 90 days. So the borrower has failed to make interest or principal amount, so that was called non-performing assets. Next one was Surface Act. So this was also very important. Its definition is very important: the scrutinization and reconstruction of financial assets and enforcement of security interest. The scrutinization and reconstruction of financial assets and enforcement of security interest act. What was the securities and reconstruction of financial assets and enforcement of security interest act. So this was in under 2002 act, was enacted to regulate securitization and reconstruction of financial assets and enforcement of security interest. So this act provides a manner for enforcement of security interest by secured creditor without intervention of the court or tribunal. So this is the act. So in this act there are 4 portfolios of banks: standard asset, double assets, substandard assets, loss assets. So, okay. So overall, the abbreviation of this Surface Act was very important, and year of this act, so that was 2002. What was the abbreviation? The scrutinization and reconstruction of financial assets and enforcement of security interest. Okay. And the next foremost important topic in this banking was a brief on ATM. So this is very important. What was the automatic teller machine? It means ATM. Automatic teller machine is a computerized machine that provides customers of banks the facility of accessing their account for dispensing gas to carry out their financial and non-financial without need of actually visit a bank branch. So without visiting any of the bank branches in our particular account, we will draw our money and withdraw, and also so will credit, so whatever things through this bank we will go the another option. So this is easier for the each and every one. So that was ATM. So the ATM definition was automatic teller machine. So in this there are many ATMs. So first one was, what was a white label ATM. So here the ATM setup owned and operated by the non-banks are called as a white label ATM. So here the ATM setup owned and operated by the non-banks. So which of the non-banks are called? It means which of the non-banks are owned and operated by these ATMs is called as a white ATMs. It means white label ATMs. No bank ATM operators authorized under the Payment of Settlement Act 2017. Okay. So what was the white label? It means what is the white label ATMs means? Non-banks which are operated and owned by these ATMs is called as a white label ATM. So overall the ATMs are 4 types. It's green. So this is very important. Pink ATMs, orange ATMs, and yellow label ATMs. So here for using this green, we will directly say that agriculture purpose we will use this green ATMs, and pink for women. and orange for shares and yellow for online purchases. Okay, this is very important. So once again we read it. What are the white label ATMs? The non-banks are operated and owned by these ATMs. It means some of the ATMs is called as a white label ATMs. So there are many ATMs. So green for agriculture, pink for women, orange for shares and yellow for the online purchasings. Okay, so and the next one was, is there any time limit for the card issuing banks recrediting the customer's account failed ATM? And so as per the RBI instruction, banks have been mandated to resolve complaints within the 7 working days. They will resolve the complaints in our transactions. So the time period was 7 working days of bank. Next one was the customer eligible for compensation for delay beyond. So in these 7 days the customer will have eligible for the compensation. It means effective from 2011, banks have to pay compensation 100 per day for delays of recrediting in 7 working days. Okay, and the next one was, so these are some currencies, don't about that. And tomorrow we'll continue with our present notes. It means 2005 series of bank notes and prompt corrective actions, and all about National Payment Corporation of India and small finance banks and its headquarters. So all these things we will discuss in tomorrow video, guys. So I hope this video will be very helpful for those who are preparing for our mains examinations, I think. So don't neglect this. Please watch till the end. And thank you for watching this video, guys. Thank you.